what is the market's confidence in the equity's ability to accumulate Bitcoin? And so there's a 7-metric framework that Mark has identified, and I'm just going to run you through them all, because they basically, when combined, you can create a scoring system, and that scoring system helps you identify whether or not this is an equity that you should look more closely at, monitor it, buy it, or like, this is an excellent buy, get involved now. The first is the mNAV, so the multiple of net asset value. This measures the confidence of the market in the Bitcoin strategy execution. So, for example, I already mentioned the idea of Semler Scientific. Well, they've got Bitcoin on the Treasury, in their Treasury. That's great, but they're still actually considered a medical business by the market. So is this a pure Bitcoin Treasury play, or is it some other morph of that? And a sustainable premium, so you want to be following this mNAV over time, indicates that the market believes the company will generate more Bitcoin value per share than holding Bitcoin directly. Now, that's a really important thing. You've got to think about how many Bitcoin per share the company has. So when you're buying these equities, what percentage of the business do you own? How many shares are outstanding? And how many Bitcoin are on the balance sheet? And are they actively increasing the amount of Bitcoin you're exposed to, or decreasing? You've got to be really careful about this. Unsupported premiums often collapse when execution fails to meet expectations. So if you can see a sustained mNAV in an equity that claims to be a Bitcoin Treasury company, that's really interesting starting place. So, okay, well, these guys they've managed to sustain a multiple over the net asset value for this period of time. Cool. Then it's the Bitcoin Holdings Transparency, the BHT. This evaluates the disclosure quality and strategic commitment. So it's like, okay, what is the quality, what's the frequency, and what's the accessibility of a company's Bitcoin-related disclosures? Like, are they actually telling everyone how much Bitcoin they have, and how often are they doing it? And so it basically evaluates the effectiveness with which companies communicate their Bitcoin strategy and updates on holdings to shareholders. So, okay, because I could just own Bitcoin in self-custody. I know exactly how much of the network I own. I know exactly where it's stored, and I know no one can take it from me or debase it on the back end. So if I'm buying an equity, I want to know exactly what they're doing with the Bitcoin that they have on the balance sheet, because to me, that's the main driver of the equity price over time. Next is the MTR, the management track record. So obviously the management drives every aspect of a Bitcoin treasury. So the strategic vision, the execution capability, the stakeholder management, capital allocation discipline. If they're poor business operators, then of course the equity value is not going to go up over time versus the hurdle rate that is Bitcoin. You're looking for exceptional leadership. And again, that's why so much of investing and decision making comes back to the team, the talent. Who are you investing in? And is it someone that you've seen creating Bitcoin content for 5 years plus, that you know is like ultimately a hardcore Bitcoin maxi, can see an opportunity that others don't because they're simply already heading where the puck is? They're already seeing round corners because their information is just better than others? Well, that is a good bet. Next up is the BTC-CR, which is the Bitcoin credit rating. So debt structure determines Bitcoin treasury sustainability during market downturns. AKA, are they over-leveraged? Poor credit profiles force liquidation at disadvantageous prices, creating strategic constraints, generating refinancing risk, and limits operational flexibility. The opposite applies, obviously, with a strong credit profile enables companies to maintain strategies throughout volatility. Now, I saw a stat at one point that MicroStrategy's net cost of debt is under 1%. Holy shit. That is an unbelievable statistic. It's like, hang on, so you can borrow at 1% and you can accumulate an asset that's growing at 40% a year. That is a great play. And it's one of the reasons why public market equities are so interesting in this instance, because you can use financial engineering. And someone like a Saylor is an absolute wizard financial engineer that spent 30 years as a founding CEO of a business, running a company as a publicly listed business. Like, what a guy to be able to invest alongside. And I, as a retail investor, like, what's the best cost of debt I can get? Well, very recently, I've been doing a real estate transaction and my interest rates are like 9%. Now, perhaps if I fit their loan profiles a bit better, I might get a 7 or an 8%. But still, you get the point. It's not under 1%. It's part of the problem, in a sense. It's close to the money printer, right? The Cantillon effect, absolutely in play here, but that doesn't mean that you cannot exploit the system if you see opportunities. Next up, the BTC-YP. So this is the Bitcoin yield performance. So Bitcoin yield distinguishes genuine value creation from simple Bitcoin accumulation. So companies can purchase large amounts of Bitcoin, but they destroy shareholder value at the same time if they issue shares at prices below the Bitcoin net asset value, or they just deploy the capital inefficiently. So a positive Bitcoin yield means shareholders gain Bitcoin exposure without suffering dilution. Really important, right? Are you being diluted or not? Next up is Bitcoin torque, which is basically capital efficiency. So, and I think this is a key driver of like whether or not you're betting on a good team. But superior operators from companies that simply spend money on Bitcoin without creating shareholder value. I'll say that again. Capital efficiency separates superior operators from companies that simply spend money on Bitcoin without creating shareholder value. So high Bitcoin torque indicates strategic leverage, effective market timing, execution excellence, and sustainable growth capability without diluting existing shareholders. Now, finally, it's the R2. It's the model fit correlation. High model fit correlation indicates market recognition of Bitcoin strategy, price predictability based on Bitcoin performance, strategic validation, and pure Bitcoin exposure for investors. Low correlation suggests the market still values companies primarily on legacy business performance. Now, I touched already on the idea of Semler Scientific still being a medical company in the eyes of the market. That's what this identifies, right? Is this an out-and-out Bitcoin Treasury code play? Yes or no? And the higher the correlation, the better the answer. And at the end of all of this, you get a score. So, and I'm not going to go into any more detail with these metrics right now, but this is a quite sophisticated piece of equity analytics that requires someone to spend, 10 to 100 hours going through the different Bitcoin companies that exist and figuring out this model and then figuring out which company fits well to the model. I am going to try and figure this out myself because I like the learning process. I'll touch on this in the conclusion. So, one thing I've tried to highlight here is there's different types of Bitcoin corporate exposure. And think of it in kind of tiers, essentially. So at the very bottom, it's like companies that put Bitcoin on the balance sheet. Now, this is what MicroStrategy did initially, right? They literally just bought Bitcoin instead of owning US dollars. And then you saw the likes of Tesla come out and buy some. There's Bitcoin mining companies that are accumulating Bitcoin all the time. But this is the kind of the lowest level. And MicroStrategy absolutely not that any longer, right? They have moved up in a sense. The layer above that is then a Bitcoin treasury with a legacy business. So MicroStrategy is that now, right? They have a very small operational company, but mainly a balance sheet play. MetaPlanet as well, right? They have a hotel, I think, underneath all of their now Bitcoin play. And then the top level is literally the Bitcoin ETF, right? You basically need to understand what tier of corporate exposure the Bitcoin is at. And so it's Bitcoin on the balance sheet, number one. Number two, above that, Bitcoin treasury with a legacy business. And then number three is a Bitcoin treasury strategy. And these businesses, as they evolve in their strategies, are moving up and down in between them.